So today, definitely a Wednesday. I didn't even remember that today was a Wednesday, but looking back at the chart now, you can see that just the way that the day was just completely range bound, like you had no moves. The first two candles were basically the entire day. Could have told me that it was a Wednesday, but I didn't remember today at all. It's coming to the point where I'm like, maybe I shouldn't be trading on Wednesdays at all. The moves just aren't big enough for you to be risking any capital. I took two trades today. The first one was just like a $60 loss. The second one was a dollar loss. Overall, it wasn't such a bad day. However, I didn't get that move to any direction. I didn't get that conviction in a move that could help me to make any money today. So that's just it about Wednesdays, and I'm seeing this trend. I've been trading Wednesdays probably every every Wednesday for this year have basically been the same, and I'll show you how this Wednesday turned out as well. So I'm following the same strategy, which is either the three line strike or I'm doing an engulfing candle strategy. So the first trade was a three line strike bull strategy, right? And the first trade was to the buy side, so I entered on the close of the bullish of the three line strike bullish candle. So I entered to the buy side on this candle, which would have been the 10 o'clock candle. So on the 10 o'clock candle, I entered at 29276, and I was quickly stopped out within around 2 minutes. So let me put that up here. So at 29276 is when I entered to the buy side. So you can see that basically where you have the three line strike candle, I wanted to enter to the upside. I had my stop loss a little bit below this candle, and generally when you have this indicator, you generally get that move with it, but the next candle right after it, which was what I entered on, was a full large bearish engulfing candle, a very large candle. And then I didn't want to enter to the downside of this candle, because when you enter to the downside of this candle, your stop loss is so big that it almost makes it not worth it to enter this trade. So I've stopped entering these large trades. Like if I had a bullish engulfing candle that's this big, I'm not gonna enter it. The reason being, you have such a large stop loss that the risk to reward of a trade makes no sense, right? So I entered here to the upside at 292.76, and then I got stopped out. So I kept my stop loss a little bit below where this candle, so I could give the trade a little space to work in case it went in my favor. Within 2 minutes, it definitely went completely against me. But I got stopped out at 29218. 29218. So you can see this is the range that I entered in, and this is where I got stopped out on the first trade. So on the trade, it was a 59.5 loss, and then for the commission of the trade, it was $1.50 was what was charged. And that was the first trade to the upside that got stopped out on that bearish engulfing candle. And as you can see, after that, you still didn't even have a bullish move to the upside. It still came up and respected this level of resistance. So after that, when we had a bearish engulfing candle, I decided to go to the downside. However, it just did not play out. It didn't get that bigger move that I would have made the money that I wanted to. So it didn't hit my stop loss, but that's why it didn't really take me down very far negative, and I just manually closed this trade close to when the market was about to close. So I entered this trade at 10:14. So let me see, 10:14 is around right here. So 10:14 is at 29108. I entered this trade 291.08. Okay, so really to the downside. And what I did was actually I lowered the amount that I was trading, so I entered 40 shares instead of the 100 shares that I usually go for, and put my stop loss at 293. So when I reduced the amount that I was trading, I was able to set the same the ideal stop loss that I wanted, and I was able to not put up too much risk. So this total risk was about $70 on that trade to make like either at a minimum $70, or I was aiming for more like a $120 on the trade. However, the trade just didn't move in my favor to the point where I could actually get out of the trade. So when I saw it kind of stagnating around 315, I was like, yeah, it's not worth it for me to be holding this trade. It's too much risk at this point. Even though I exited on a bearish engulfing candle, it still did not give you that move to the downside. And I'm seeing this trend where Wednesdays just don't move like that. Wednesdays just, they just completely whipsaw you until it just makes complete no sense for you to even be trading on Wednesdays at this point. And that's what I'm seeing. So these are the two trades that happened today. Stuck to the strategy, kept the risk reward, did not overtrade. So I only made 2 trades today. So I'm aiming for just a max of 1 to 2 trades per day. If the strategy does not work out, I'm not going to try to overtrade. I'm just trading the strategies, just focusing on the strategies, and ideally I can enter the strategy on a engulfing candle or a 3-line strike candle, and also just keeping the stop loss a little bit above or a little bit below where I entered, so that way I don't take up too much risk. And if I have a real trending move, I can actually easily move my stop to break even, and in an ideal situation not lose any money on the trades. But that's basically what happened today on the QQQ. So I'm focusing on the QQQ mainly. The only thing otherwise that happened today was Tesla had their investor day where they released like the real how the Cybertruck looks, and they're also unveiling a new product, but they kind of kept it under wraps. I'll just put it up right now. 1 second. So they kind of released the Cybertruck, how they're going forward with the battery plants, how they're allowing non-Tesla vehicles to access the Tesla charging network as well by paying a subscription. What I see is very important about Teslas as well is that it's basically the only car company that owns its gas stations at this point, and they're charging other vehicles to use its gas stations. And Tesla chargers are basically an arbitrage of the grid. So basically, they're taking energy from the grid, selling it to you packaged in a Tesla supercharger for a little bit higher than what you'd pay if you were charging at your house. So they make clean profits off every supercharger. And also, let me pull up what they were showing about the. I want to pull up what they were showing about. So they're saying they have a new drive unit. So basically, Model 3s, Model Ys are basically made of almost the same like frame. So it's easier for the machines to just make a lot of those vehicles. And they have another like frame that they're going to make as well, and probably sell a new style of vehicle for what they're seeing. So this is a guy called Sawyer Merritt. He posts a lot of Tesla related news. So that it says Tesla's next gen vehicle platform will bring a level of efficiency the world has never seen. Legacy Auto has already been struggling to catch up with Tesla, and now the company is about to take another leap forward. So they're saying the all-in cost. I'm not understanding what they mean by this, but the all-in cost should be about $1,000 to Tesla per vehicle. That's, I don't know how that makes sense, but if they are making a vehicle that's so cheap to make, it's gonna be one of the lower price vehicles on the market, and they're able to actually price out a lot of the cheaper competitors while probably offering full self-driving, while offering a vehicle that actually works, because most of the other OEM vehicle makers have not really have not really got the technology down, and that's normal. It takes some time for everybody to kind of figure out how to make electric vehicles. It's not as simple as everybody says it's going to be. It's not just putting a battery in a vehicle. There's a lot of nuances to it than people actually think. So this is the most important thing that happened today from like a news point of view. So Tesla having their investor day, and I'm not sure if they're having a wireless charger. That would be very, very interesting. But it's basically what happened today, and you know that Tesla also filed a patent to open diners around their supercharger. So they're expecting that when people come in to dine using the Tesla charger, you know, people generally charge for about 15 to 20 minutes. They might just need some place for them to go inside, grab something to eat, grab something to drink, and then continue wherever they're going. But it might be a good opportunity for them to just supply a service, knowing that people are going to be there. They get a little bored, they want something to do, they can just actually spend more money at Tesla. So Tesla can actually make more money there. But that's basically all that I know that happened today, along with just me trading the QQQ and just using the strategy and seeing it didn't play out well today. I'm not gonna blame it fully on the Wednesday, but I know that Wednesdays typically trade that way, and we'll see how tomorrow trades. I mean, I can almost guarantee you that tomorrow we're gonna have a move that's more trending. So if tomorrow the market decides to go to the upside, it's going to go to the upside, actually clear some level of resistances and continue and continue. And I can actually swing that trade and actually make some money. So let's see how that goes. If it's within the first two trades that I make, I can almost guarantee that we're going to be able to capture that move. The market is in a bearish trend. So ideally, I'm looking for three line strike bear indicators to the downside and also bearish engulfing candles to trade it to the downside. All right. Hope you enjoyed this video, and I'm seeing some new subscribers coming. I really appreciate that. And I'll see you in tomorrow's video. All right. Bye bye.